This conference will now be recorded.
Welcome back. This is now chapter 6 of our options trading course. Welcome aboard again. Carlos Garcia, founder CEO of G.A.R Capital. Welcome to chapter 6, Plan to Succeed, Trading Plan Time. I just want to go ahead and start before anything is that there's a quote that I've always lived by as a trader, as an entrepreneur, business owner, is that if you fail to plan, you are planning to fail. Remember that. If you are failing to plan, you are planning to fail. No matter what you do, in the context of anything in life, you always have to plan correctly. And options trading is no different. Again, you are obviously planning to be successful because you are taking this course. So bravo to you. You're taking the first step to learn a skill in order to gain either financial freedom, extra profit, whatever you want to do in regards to this course. Whether it be a full-time trader, part-time trader, or just a way to, get some extra cash on the side. Really up to you. So we're going to talk about a couple things in regards to our trading plan. Now, as you know, we do have a signal service. We also do one-on-one teaching, and there's a couple things that I always discuss with my traders, I discuss with my students and clients, is that we always apply the 40% rule. Now, what is the 40% rule? When you have a trade, as you can see here, we're going to come back to AMD. So we're going to pretend for a second, we're just going to pretend that we bought some of those $29 calls on AMD expiring September 7th, correct? Excellent. Well, we bought them at 54 cents, let's just say. And you bought about 10 contracts. So knowing what we know, I'm going to go ahead and talk and show you something, which we call here our option spreadsheet. Now, this is something that I've always used to keep exactly what you need in regards to trading all together. So what we have here, this is basically an option spreadsheet. So we can actually type in AMD, September 7th, 29 calls. Now, again, this is not Excel. I have to install Excel on this computer. No worries. Today is the 5th and 18, and we bought them in at 54 cents. If we bought 10 contracts, the cost is $540, correct? $540. So let's say we close out at 70 cents, 72 cents. 72 cents is the current market price. That means you're at 33%. We would actually have to wait a little bit more. So let's go ahead and put it 76 cents. We're at 41 cents. So let's say you're looking at your P&L sheet when you're actually doing your trading. Again, I'm going to show you on Thinkorswim, the platform. You can actually go to monitor and you can go to positions, and you can actually see here on trades, these are just stocks that are being held. You'll see the P&L here. Exactly the P&L. And it'll say 41% there. This one doesn't have it. This is actually just a side account that we use. So if it says 41%, this is what I want you to do. You need to be closing out your trade at 41%. Now you probably say to yourself, Carlos, why only 41%? I always see you trading 100%, 200% gains. We're going to go with that within the next chapter, which is called Let the Runners Run. That's chapter 9. So from now on, I want you to think about the 40% rule in your head. The 40% rule is that when you hit 40%, you close out your trade automatically. So let's say you bought $540 worth of contracts with AMD. Your profit is $220. You made 41%. Congratulations. That's great, right? Let me just close this out. So you made 41%, you let it go, you close out, you move on to your next trade. That's exactly what we're going to do. And you continue that, because what we want to do, guys, and I want to make the baseball analogy, is that we want to hit base hits constantly. We want to have a high batting average. We don't want to hit home runs every single time. If we do, great. But again, they're a little harder to come by. So if you consider 40% every time. So I want to go over with you the trading plan. Again, 40% every time for profit. Now, when you actually buy an option, let's say it gets to 20 cents and you're feeling a little heat. It's down 63% and you actually see it there. I don't want you to close the trade. There is no stop loss when it comes to options. You're going to just let it go to at the end, because when it comes to weekly options, things flip so quickly. We've actually seen many trades go from 80, 90% in the red to 20% in the green within a blink of an eye. Options are very volatile. For the most part, stocks tend to move very quickly. So again, it's a great way to just keep it open. Keep it open because you don't know what's going to happen then. If you're worried about what's seeing in front of you, you're risking too much. It should be to the point where you're almost robotic, that you just know what's coming in. You see the gains, you move on. You close, you move on. And you're just doing this constantly. You're going to be trading so much, it's going to get to the point that you're just numb to the fact of your gains and losses because it's part of your plan. When you have a plan, you're not even thinking about it. You're just doing. You're just flowing with it. I want to like the analogy of playing the piano. You're not looking constantly at the music sheet. You're just playing the piano. Options trading will be the same thing. You're just playing. You're just trading, letting it go. So again, that's the Excel spreadsheet. If you are interested in this copy of this Excel spreadsheet, please email me, garcapital@gmail.com, subject line spreadsheet. I'll be more than happy to send that out to you guys. Absolutely free of charge. You can do with it whatever you like. Free to everybody, as you like. So again, moving on. So we're going to go over exactly the trading plan within the math. So we're going to pretend here for purposes. Now we're going to talk about risk. We always recommend 2 to 4% risk per trade. That's call or put. Hope you write that down. Call or put. So what you want to do is 2 to 4%. Let's say you have $5,000. $5,000 is in your account. You're going to risk 4% on a trade. That's $200 max you can trade with. So let's say you want to take a look at AMD and you want to trade this position that we talked about. If $200 is your budget, how many contracts can you trade? Looks like you can only trade up to 3. Well, let's see if we could do 4. You could probably do 4 right now. 4. You could only do 4 contracts. That's $222. That's it. Excuse me. Bless me. $222 is the max you could do on that. So $200 is the max, but again, $22, we're not going to lose face over. We're not going to go crazy over. So let's go to that. So let's say you bought, again, 4 contracts. Let's go back to our calculator here. Say you bought 4 contracts instead. Your max interest, your max cost is $216, obviously without commission. If you made 40%, which I believe we were at 71 cents. No, we were at 74 cents. Nope, 75 cents. Or 76 cents. 76 cents, you would have made $88. Now you probably say to yourself, Carlos, that's not a lot of money. I'm going to go ahead and show you the math here. So you make $88. $88 again. You do that 3 trades a day, which our goal every day with our signal group is 5 winning trades a day. And we've done it consistently. So again, I'm going to put you on the low end and do 2 a day. If you made 2 winning trades a day of $88 each. $88 each. So that's it. Account balance, and you made $88 per day. Per day. Calculate compound interest. If you do this consistently, without any losses, $37,032 is in your account for $5,000. So let's take away some losses. Let's take away 20% of that. $37,032. Say $37,032. Let's say you take away a quarter of your trades have been losses. So let's take away $9,258. Right? So I'm going to go ahead and calculate 37,032 minus 9,258 is 27,774. Now again, on this compound calculator, it takes away 2 days. 2 days because it's Friday, Saturday and Friday. I mean Saturday and Sunday, which you don't trade. So take away those 2 weeks. There's 52 weeks in the year. So 52 times 2 is 104, right? So 104 times 88 is how much? So let's do that again. 104 times 88 is 9,152. So you're gonna have to take those $88 away. So let's go ahead and do that again. 27,774 minus 9,152 because the day's off, 18,622. If you do what I'm telling you, $88 a day, you stick to that. You only have 2 winning trades at 40%. And we already took out some losses too. Remember, 25% of yours have been losses. You're at a 75% clip. 18,622 you can make profit off in 1 year from a 5,000 account. Now let's see what that growth is here on your equity side. You go from 5,000 to 18,622. That would be a 272% growth for the year. Is that possible? Absolutely. Absolutely. Let's just bring that down a little bit. Let's put that, take away, let's say you have another 5,000 in losses. Let's say 13,622. That's still 172% gain. And I'm being on the low end. If you do this consistently with the volume that we're talking about and you do the 40% rule, you can make money in this market. Absolutely. Calls and puts. We've shown you the math. Okay, you can always rewind this at any time. Again, we had to take away the days for the Saturday and Sunday. That's $88 a day. There's no interest on that, obviously. $88 a day, 1 year from a 5,000 account. That's it. It's just every day, $88. That's your goal. That should be your goal, is to make an X amount per day. It could be 40, it could be 88. Let's say we move it to $40. That's still $19,000. Take away some losses. Let's say you get to 10, you could double your money within a year. Of course you could. You could. But again, I just want to keep you with the idea that the math is there and it can be done. Again, I don't want you to think that you could be a millionaire overnight trading options, because that's not what we're selling. That's not what we're telling you. The main deal here is that the math is there. Use the 40% rule consistently, base hits, consistency with a trading plan, writing down your trades. Again, sticking with what you know, which is the big cap stocks with high volume. Do your charting, 40%, get out, and keep the 2 to 4% risk profile. Again, do not raise your risk profile, only raise the risk. Again, pretty simple math. You go to percentage calculator, 4% out of 5,000, you know your number is $200 per trade. Let's say you made some money, you're at 8,000. Well, then you know what? You could trade a little more. Earn the right to trade more. Don't just start going crazy and start going all in. That's the number one reason traders lose. Traders lose money is because they go all in and they get excited. So they'll risk 30% of their account, half of their account, more than half of their account. And the worst thing is that it actually works, because then they'll keep doing it, and statistics will show they will lose money every single time. So again, you need to stay disciplined. If you want to make money in this market and make it a continuing career for you, you want to go ahead and do the 2 to 4% rule, 40% close, stick to high volume, big cap stocks. Simple as that. That is the layout. 2 to 4% on your risk. You can always check that out, percentage calculator. Always write down your trades on your trade spreadsheet. Again, 40% rule, get out at 40%. And then, of course, stick to big cap stocks with high volume. The volume number we like is anything over 1,500. So keep in mind there, out of the money over 1,500 within the same week, if not the next week. Pretty simple stuff. That's the trading plan. Stick to it, guys. I promise you, if you stick to something and you put a lot of focus on it, you will be successful. So again, that is our chapter on Plan to Succeed, our trading plan. We'll catch you for chapter 7 on profiting. Now what? Now we're going to get into trader psychology, help you understand profits and what to do. We'll catch you for the next chapter. Again, this is Carlos Garcia, and I will catch you for the next chapter.